Hi, Harry here with the Rant on April 4th. Obviously, plenty to say today. I've been looking for a top here, and I've been seeing that I think it already started in recent months, and now, thank you, Donald. We've just been waiting on a trigger, and this looks like it. Okay, I mean, nothing like tariffs to spoil a bubble. And when's the last time we had major tariffs? Oh, yeah, it was in June 1930, Smoot-Hawley, okay? Just as we were starting to weaken, stock market's already starting to go down, and the economy just starting to weaken for the Great Depression. Hoover throws on tariffs, and look at it. I mean, this is not a good time to do this for a president, because it's going to make it look like you caused the downturn. Now, the tariffs will make it worse a bit, but these 30s would have happened. This crash is due to happen. And folks, it's actually, as I've been saying, it's 5 years overdue. You know, the first bubble crash, we had the first downturn 2007 to 9 due to the demographic downturn. And after the first tech bubble in 2000, and all we needed was a second tech bubble crash, which on the 45-year cycle, which I've really got down now, should have happened between late 2019 and late 2022. Well, all this massive stimulus, they skipped over not only a Great Depression, I think it's in a deflationary period, but they skipped over the final crash that would have brought markets back to reality and allowed us to be growing productively again with the markets and investments, with the millennial spending wave, which turned up in late 2023. So we do have a good wave coming up between now and late 2037 and the next advance, several, 10, 12 years or so, okay? But we didn't clear out the debts in the bubble from the last time around and after all this massive stimulus. So that's what it looks like we're gonna do now. This will take 2 to 3 years to do if we continue to happen. Now, I'm gonna have to continue to monitor this, obviously. They're gonna fight this downturn, but my theory here, since they overreacted to COVID, I mean, way overstimulated for short-term crisis, they're going to be slow to turn around and ease so aggressively. I mean, that's going to look like the biggest whipsaw in history, and these guys don't know how to drive on a 70-mile-an-hour highway, okay? So I think they are going to react too little, too late, and I think the economy's so stretched, so long, again, 5 years longer than it should have been, that the economy's going to have too much downward momentum. So that's what I see. Another thing that's very similar to 1929. We also had whole new industries moving in, electric, automobile, and particularly the auto industry was the main one then. You had Henry Ford that innovated with the assembly line and Model T and was leading in the early stages, but by the late 20s, General Motors comes from behind, superior marketer, okay, more car lines to cover more people, and ends up passing Ford. So when the shakeout came in the early 1930s, General Motors became #1 forever and Ford #2 forever, at least for many decades after that. So we got the same race for leadership today. Who are the leading companies in the information revolution, okay, particularly in microcomputers and iPhones and software and stuff? Well, it's Apple and Microsoft. Apple was the radical innovator. Steve Jobs had the best software and really got this thing going in the late 70s and 80s and stuff. But Bill Gates comes along, bigger vision, be the standard for everybody instead of the best computer, passes Apple forever, and now they're #1 coming to this shakeout, and there's just going to be a shakeout in everything, in biotech, all the leading industries, the economy in general, and this is how the economy works. This is not a bad thing. People like, acting like, Harry, you want to see this thing happen? Yes, I do. I do. We need this shakeout. Markets are way overvalued. Money velocity has been dropping since 1997, which is a sign unproductive speculative investment instead of productive investment. So we need to wash all that out and get back to a healthy economy. No way to do it without a great shakeout, and great shakeouts are part of the process. In fact, it's the downturns and shakeouts where we get the greatest innovation and the greatest efficiency in business, which allows and drives the next boom. So good thing, all we have to do is be ahead of it. So again, we've been warning people to be out of stocks and be more conservative into treasury bonds. Treasury bonds are rising again. I mean, they look like they put in a clearer bottom now. They're going to explode down the road. Don't look for it yet, as I'm warning, but that's going to be the big reward, how we can make a lot of money. Treasury bonds could still double in this crisis because it's going to be a lot bigger than 2008 and 9. And remember, I'm calling this 1.5x. The unemployment and the stock crash of 57% in 2007 and 9, we should see 50%, 1.5 times that. So we're talking 86%, 89% in the S&P 500, maybe 94% plus in the NASDAQ and tech stocks, okay? And unemployment, you know, could get up to 15, 16% instead of 10 to 11. So this is going to be, if they don't block it again, and I think they're out of bullets here. I really think they're out of bullets and they're going to be too slow. This is going to be the crash of our lifetime, as I've been promising you for a long time. And again, I'm not bullish or bearish. That's why I'm a good forecaster when I am, because you can't be a perma-bull or a perma-bear. And guess what they're calling me now? I just gave a presentation in Jacksonville a couple of days ago, and it's just like, oh, Harry's now the new perma-bear. I'm telling you, I'm bearish for a couple years. I've been the most bullish person since the early 80s in history, okay? So have some perspective. This is a necessary shakeout, and we have to get rid of this second bubble, because the second bubble wasn't even a natural bubble like the 90s or the roaring 20s. This is a total artificial, where the governments are going to block a recession because they're hard, and we're just going to say no, we're going to throw out free market capitalism. That is what just happened, folks. 2009 forward, the most successful system that has multiplied wealth 10x or more than any time in history, especially the last couple hundred years since it was invented by Adam Smith in the late 1700s. We just threw it out. Oh, because we didn't want to have a recession. What a bunch of sissies. So that's what to expect. The markets have fallen enough now to say, yes, this is looking more like a top, and boy, they just fall another 3, 4, 5%. It's going to make that more obvious, and I expect that to happen. Again, I was looking at the whole succession of tops. The last two I expected was the S&P 500 in the US and the DAX, even more safe haven in Europe. And the S&P looked like it peaked on February 19th, and now finally, perfect succession, the DAX looks like it peaked just recently on March 18th. So everything's going according to plan. Look for more downside, and again, I'm just hoping that the markets stay ahead of the Fed, which I do expect, and this crash happens and we get rid of this bubble forever and go back to a normal economy where we can invest for the long term reliably again and not be on an unnecessary roller coaster. And of course, I'll keep you updated.